Shocking new data has just been revealed that the unemployment rate is ready to explode and the government's numbers are completely fake. There could be 500,000 people more than the government says that are actually employed. We'll get onto that in a bit. Let's first of all just start off with all these layoffs. The markets are in absolute free fall today. It's just a bloodbath across the street. If this continues, though, it's going to be an incredible buying opportunity. That's if you have a job, because that is, of course, what we're discussing today. So Stellantis to temporarily lay off 900 US workers as tariffs bite. So Stellantis said on Thursday it was temporarily laying off 900 workers at 5 US facilities and pausing production at one assembly plant in Mexico and another in Canada after the tariffs were announced. You've obviously got Hudson's Bay, and obviously this is one store that is like the oldest store in Canada, and it's shutting down, and that's going to have wide-reaching consequences. And it says right here, people whose companies sell merchandise to the Bay and thus are losing one of their key revenue streams could also wind up on the chopping block with the retail's 9,364 workers. And we're going to get into the StatsCan data in just a second here. You've also got US Canadian steel workers hit with layoffs amid tariff uncertainty. So you can see a key theme here is that jobs are being lost on both sides of the border. It's a complete lose-lose situation right now, and it is absolutely terrible for the middle class because it's the poor and middle class who are being destroyed by these tariffs. Do you think any of the politicians give a damn? I mean, they don't care. They're sipping champagne from their gold glasses and they've got security around them. They don't care about you. They just try and act like it. And it's just so freaking frustrating. So again, 1,400 job cuts to affect operations in Michigan, Minnesota, Ontario, and Quebec. So that's more job losses there. And then we got the headline here. So Canada's economy lost 33,000 jobs in March. Unemployment rate rises to 6.7%. And we're going to get on into a second how actually these numbers could be way higher than the government says. And obviously we know that the fake CPI, many different other things that come out from the government just aren't accurate at all. But again, it's the middle class that is being hit by this. So we're not at the high, but we've notched up here back to August 2024 levels on unemployment, December 2024 as well. This is just the unemployment rate though, bear in mind. So the economy actually lost 33,000 jobs, as you can see, and the unemployment rate rose there 0.1%. So it gets really interesting, though, because when you compare different provinces, there's been some real different moves that have been going on that are worth noting, because in some provinces, unemployment is spiking very quickly. Others, it's actually declining. And it's very interesting. So employment declined in wholesale, retail, and trade, 29,000. Culture and recreation, minus 20,000. Other services, such as personal and repair services, plus 12,000, and utilities plus 4,200 jobs. And then you can see here, employment fell in Ontario, minus 28,000, and Alberta, minus 15,000. But it actually went up in Saskatchewan. And even though that's a small amount, that's because the population's a lot lower. Now, this is really interesting because you've only got to do some simple math to pick this apart. But basically, private sector employment fell by 48,000. Public sector employment basically did nothing. But year over year, public sector employment was up 92,000, which is 2.1%, compared to the private sector up 175,000, 1.3%. So you can actually see the public sector is growing way faster than the private sector. But guess what? If you take away the public sector jobs and the private sector jobs away from the population growth over the past year, you have a deficit of over 500,000 jobs. So over 500,000 extra people, because of the population increase, could be unemployed right now and likely are unemployed. And that's why you're seeing so many people that are going out on social media and just voicing their concerns about how they've been looking for jobs for over 6 months and they're still unable to find a job. And they're not talking about like some high-end internship. They're talking about just working at Wendy's, Tim Hortons, or McDonald's. I mean, that is absolutely crazy and shows how bad the labor market really is. And here's a map of basically what's going on across the provinces here. Most notable is Alberta, Saskatchewan, and Ontario and Quebec. And you can see those are the ones with the most change. So the Alberta unemployment rate notched up to 7.1%. But Saskatchewan below 5% now, and you've got Ontario up to 7.5%. So of the populous provinces in Canada, Ontario and Alberta have the highest unemployment rate, and that is just the beginning, because this is going to get a lot worse, as you can see by this chart of how many sectors are losing jobs compared to how many are gaining, and those gaining are not much compared to the amount lost. And this could all reverse as well, because look, transportation and warehousing, incredibly dependent on the economy. Obviously, if goods aren't flowing, then that's going to be even worse. And you're going to see that happen because things are starting to freeze. Places are starting to shut down production and manufacturing because it is just a total disaster right now. I mean, I'm so sick of talking about tariffs, but honest to God, like you look at the complicated tariff formulas and all the different tariffs, and it is just a logistical nightmare. And then you've got countries that are coming back and going against that. And that really is the risk, right? Trump was trying to get people to the negotiating table. Well, he just had the second largest economy in the world, which is hitting the US with 34% tariffs. So obviously, if you're trying to become a big exporter and the second largest economy in the world is saying, yeah, we're going to put 34% tariffs on your product, I mean, that's not really coming to the negotiating table, is it? And the markets are just in complete free fall right now as a result of this because of all the uncertainty. Nobody knows what's going to happen, but it's going to be a case of how long and how much economic pain are countries willing to endure until they actually start waving the white flag, because that's what's going to have to happen. Countries are going to have to start negotiating, and it's exactly like the war which was happening in Europe, Russia-Ukraine. Obviously, you had that war going on, and nobody wanted to get to the negotiating table. And it's exactly the same now. It's like just hate America or buy American, buy Canadian. Like it's just so dumb because people are just making themselves poorer and poorer at a time when they're most likely to lose their job, and the economy in Canada at least is deep in recession, as we know on this channel. And then also we had data that the US unemployment rate went up a bit. I mean, their unemployment rate is lower than Canada, but obviously take a look at what's been happening with US assets over the past couple of years. It's because people have believed the US economy is in much better shape. And now it's gone from one of the better economies being in better shape to being in one of the worst shape because of all of this which is going on. You've got the Canadian dollar that shot up, and we covered this yesterday, and now it's down. You know, it is retracing some of its gains yesterday, but still it's up compared to the start of yesterday. I think it closed like up 1.5% yesterday or something like that, so kind of crazy. If you look across the markets, the S&P 500 here is tanking, though it's not in a bear market yet. If you measure it out, it's around 15.83%. I believe the NASDAQ did go into bear market territory today, and so the NASDAQ is officially in a bear market. And then you've got the Dow here down over 3%, and these are really coming down from the highs here. So the Dow is down around 13.57%. And then if you look at the TSX here, so the TSX from the high is down. Let's see here. So we got the TSX. It's only down, you know, nearly 10%. And the same thing is happening with European indices as well. The European indices aren't falling as much, although the FTSE is down 4.8%. Oh my God, look at that chart. That is just, but still not as much as US markets. And that's what's really interesting about this. I mean, if you actually look at the Hang Seng Index, which is Hong Kong, you can see here that Hong Kong index is only off about 8.8% compared to US markets that are in double digits, and the NASDAQ that's down over 20%. You've got the euro that's off about 0.6% against the dollar, and the pound is down 1.3%. I'm really going to have to check after this live stream what's going on in the UK, because the pound is down, the FTSE is tumbling like crazy here. And then you've also got bonds. You know, the 5-year fixed rate is absolutely tanking here. And it's like I said, you know, it's going to cause an initial bout of inflation, and then it's going to cause deflation. It's going to cause an outright depression, these tariffs, because unless the government comes in and says, we're going to give you stimulus, and I can tell you that is probably on the horizon. It's probably coming. And that will be unfortunate. You've again got gold that is falling. Gold is falling across the board. It's falling also in pounds and in Canadian dollars as well. And then if you look at oil, I mean, just look at these charts. I mean, what do they tell you about the economy when you're looking at commodities like oil down over 8% today? And off the highs here, of recent highs at least anyway, oil is down over 23%. So what does that say about the global economy and what is going on right now, and whether job losses are likely to increase or decrease? I think it's pretty obvious the way this is going. This is a time to save. You know, if you're in cash, majority cash right now, then there could be incredible buying opportunities that are just around the corner here as well. So it's very interesting what is going on with these markets. We'll have to continue to monitor what goes on with these markets, obviously. But the job market, it does not look good at all. And the Bank of Canada really in a tough spot right now, because the jobs numbers are so fake that I doubt they can really use that as cover, seeing as inflation just rose more than their 2%, you know, half of their 2% target. It was 0.6% for 1 month, February. So I'll have to check whether we have another inflation print before the next meeting and what's going on there. But obviously the bond market, and the bond market is usually correct, is betting on lower interest rates. So that's probably what we're going to see here. So it'll be interesting to see. Anyway, guys, I want to thank you so much for watching this video. If you've enjoyed this video, I'd highly recommend that you check out this video there. And if you've enjoyed this video, then please like it, and please leave me a comment of what you thought of the new studio. Let's see. Anyway, I'll see you in the next one. Take care.